store sales up by 6.1% and total sales up by 13.1%. So sales really being driven by store rollouts. They're targeting 15 new stores in the full year, and that would take the number of stores in Australia to greater than 100 and the number of stores in Australia and New Zealand up to around about 170 stores. So the fact that we are seeing this store rollouts is really boosting that total sales number, and that really represents the difference that we are seeing in between total sales compared to same store sales. They're predicting a net profit of between $9.5 to $10.5 million for the first half, and that's a boost of up to 75%. So it does look like that we may have seen a bottoming in retail conditions. It does bode well for the retailers, but we've already seen Kathmandu shares running quite hard. In fact, just in the last month, Kathmandu shares are up by a massive 12%. That compares to Myer, which has done a little bit better with a rise of 15%, but David Jones has been trailing there with a rise of 6%. So Kathmandu coming out with some bullish forecast for its first half results. Some strong same-store sales numbers as well as total sales numbers, but we are expecting to see that second half to be even stronger, given that Kathmandu's earnings are skewed towards that second half.
Julia, just in that retail space still, Westfield coming out with a bit of an update saying it expects to pay a distribution of around 25 cents a share for that first half. It reports its first half results on February 27. What can you expect there now?
If we have a look at Westfield as a business, its earnings are usually relatively stable, and that's because a lot of its earnings comes from the rental income that derives from its shopping centres, and that tends to be quite stable, and that's a source of stable distributions for shareholders. But really where I guess the difference or the potential surprise in Westfield's earnings comes from the development pipeline that it has. Now, Westfield has a fantastic track record of being able to come up with these huge developments and either sort of spin them off with a partner, but that's really where the value and the growth in Westfield comes from. So the income part of the portfolio and the distribution is quite steady coming from the rental part of its portfolio, and really we watch the development pipeline to get an idea on the capital growth potential of Westfield. While we have seen retail quite soft, Westfield has managed to remain quite steady. So while the retailers are doing it quite tough, it does look like rents overall have been increasing for Westfield, and that's because of some of the new developments like the one that they have in Sydney as well as the one that they have in London.
And just finally, Julia, what sort of stocks and sectors are you expecting to make some big movements today?
Well, if we have a look at the Australian share market, yesterday was the last day of the month, and we actually finished off a pretty good January with a rise of 4.9%, and that's the best monthly performance that we've seen since January last year. In the last 12 months, 10 of those months have been gains. So it has been a fantastic run for the Australian share market, but it looks like we may start off on a softer note for the month of February. We have a look at the US market. We did see a slightly negative lead coming through. The initial jobless claims were a little bit worse than expected, but it looks like it's due to seasonal factors, so the market seemed to just shrug it off there. The 368,000 last week, so we did see a spike, but the Chicago PMI beating on the upside with a read of 55.1, but we did see commodity prices decreasing, oil breaking its 4-day winning streak. We saw gold prices also coming down off a 1-week high, and base metals were lower. So we could see that materials side of the market dragging on our market today, and it does look like a softer start to February after a fantastic run in January.